The local economy seems to be struggling to shake off the effects of the battering by the COVID-19 pandemic. In the period between March and June, lockdown restrictions were adjusted to level 2, then 3 and 4 at the end of June, as the country battled high infection rates. The stricter restrictions would have had a negative impact on sectors such as manufacturing, retail and travel and tourism, amongst others. While the mining sector has been boosted by the booming global commodity prices, Stats SA will not be able to give a full account of the sector due to incomplete data received from the Department of Minerals. The Statistics Agency could not release the mining production data for June due to the delay from the department. Stats SA says while it is concerned about the delayed mining data, it is not concerned about the integrity of the GDP numbers. It says the GDP may be revised when the new data is available. One economist says while the second quarter GDP is important to give an indication of the underlying strength of the economy during a difficult period, estimated data will have to be reviewed at a later stage, making this week's GDP data not fully accurate.
Unfortunately, the chances are quite good that the numbers are not going to be, that solid. And the reason for that is because Stats South Africa recently went through a process of redefining and refining the way that we're reporting on GDP, and they also rebased the base year for GDP calculations. All these factors are likely to contribute to, data that it is a little bit confusing and perhaps not that trustworthy. Additionally, the mining data is also not available, simply meaning that Stats South Africa will have to estimate the mining data for the second quarter. So I'm afraid I am not going to put too much trust in the second quarter's data. What is more important, however, is the expectations for economic growth for the year in total, and I think economic growth for the year in total is likely to be a little bit better than what is generally expected.
Stats SA has recently said with the rebasing of the GDP, South Africa's economy proved much bigger than previous estimates. It put the annual growth rate for last year at -6.4%, compared with an earlier estimate of -7%. The agency will from this week do away with the annualized figure for the GDP, which compared one quarter to the similar quarter from the previous year. It said because of the COVID-19 pandemic and lockdowns preventing some sectors to operate, there were extreme movements in data collected, which tend to exaggerate the growth rates, and that can be misleading. The agency says the annualization is more relevant during periods of steady economic growth. The unrest and looting that happened in July will likely have a further negative effect on economic performance in the third quarter of the year. Gloria Sefakomosi, SABC News, Johannesburg.